Hi, we have discussed private limited company, which means a private limited company is a company which sells its shares to the private people. These people are your friends or your families, people you know, people within your circle. Another thing about private limited companies that your friends and families cannot sell these shares further. So these shares are not transferable. But a public limited company, as the name suggests, is like a private limited company, but over here the shareholders are the general public. So what happens is that the public limited company, it sells its shares to the general public. So the company would sell its shares through stock market. Stock market is a place where trading of shares is done, where company would sell its shares, float its shares once, maybe 100 shares, 200 shares, 1,000 shares, and people, general public, would walk into the stock market and would want to buy the shares. So like I've said, stock market is a place where people trade shares. So a company A, let's say it's Apple, it's selling shares. You would also see shares of company B, which is let's say Bugatti, or which is any other company. You could also see shares of any other company, maybe Google. Every company you see, they sell their shares at the stock market. It's a market, just like a vegetable market, a fruit market. There's a stock market where stocks are the shares which are sold. People would come and buy. You must have seen those videos where people are shouting, they're buying shares, they're selling shares, and they do make a lot of money. So yeah, that all is done at a public limited company. So the company would sell its shares around to anyone. Public limited company is like a private limited company, like I've said again. But there are few differences and few similarities which we'll discuss to make things better for you. Yes, they both have limited liabilities, which means that both the companies have limited liabilities, which means that if something happens, the companies lose business, they lose anything. It will not affect the shareholders. Shareholders, they will only lose the investments they have made, the money they have put in as buying the shares. They will not have to pay anything about. They will not have to pay any loans or anything. So they both have limited liability. They both are incorporated business. Now we have also discussed incorporated business. I'll quickly take you through very quickly. Incorporated business is when a business is a separate legal entity, which means the business has its own name. Business accounts are separate from the private accounts. They are separate from the shareholders' accounts. The business can make contracts. So this is a separate legal entity. Private limited company and public limited company, they both need memorandum of association and article of association. So they both need that. But where's the difference? Shares are sold to friends and family. With public limited company, they are sold to public. With private limited company, shares are maybe sold at an office, at a meeting, boardroom. Over here, they are sold at stock market, some market out there. Private limited company has very few shareholders. Public has a lot of shareholders. Private has a control over who is buying and who is selling, control over share owners. Very limited control when it comes to the public limited company. So these are the few very important benefits. Please don't confuse public limited company to a government owned. It is not government owned company. It's not. It's just a normal company. By public, it means for the general public, for whoever would want to buy. A public limited company would normally be bigger, way bigger than a relatively smaller, then the private are also very big, but they're a bit smaller than public limited companies. So now you know the difference between both the companies, I believe. There is, there is another thing which I would like to discuss is annual general meetings. Annual general meetings. So this meeting is done every year, once a year, where the company invites all its shareholders. Not all can come because you have thousands and thousands of shares holder, but the most would come, and especially those who have bought a lot of shares. And these thousands and thousands of shareholders, whoever would come, would vote on the day. They would vote on few things. For example, they would want to maybe choose the board of directors, choose board of directors. There are few decisions which would be discussed, and everyone would vote on for or against on decisions. At annual general meeting, financial statements are shared. Statements, which means whatever the company has done, the current board will discuss that in front of everyone. Let me quickly take you how this works. So the shareholders, these are shareholders, they vote and choose board of directors. And by the way, these board of directors are from the shareholders mostly. Now these board of directors are chosen by the shareholders. These board of directors would then choose CEO of the company, senior managers of the company. CEO is the manager who will run the company. Of course, board do look into the company, but on day-to-day things and everything is taken care by the CEO, and the CEO will hire its managers, marketing manager, HR manager, finance manager, and other managers. So all these managers will run together the business. So now CEO or the head of the company will report back to the board, will tell them, share the performance. The board shares the performance with the shareholders on annual general meeting. So it's a meeting done once a year, and you have all the shareholders come vote, all the board of directors and people, they talk about the financials of the company. So this is how a board of directors or companies would work. Another thing I just want to discuss before I close public limited company, we've all discussed how one single shareholder invest in a company, which means he buys shares. So one person buys share from the company. What do they get in return? From profit from that share, they get dividends.